Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld broadcasting live from the San Francisco Money Show. And again, we're bringing on a whole hodgepodge of investment asset types and categories. And John O'Donnell is circling feverishly around the booth right now because we're talking about gold. And we're going to look at things a little bit different. Normally we talk about gold bullion, ETFs for gold, gold futures. Today we're going to look at coins. I'm joined by Paul Buzby, who's a financial analyst for Rare Coin Wholesalers. Welcome.
Good morning, Mark.
Well, it's a pleasure having you on because I've walked by your booth earlier and I see so much interesting literature. I use the word interesting very, very rarely on the program because you have things about gold confiscation. You have a red flags, beware of buying gold because there's so many, let's just say non-savory activities going on in the part of the gold community. So before we dive into that, tell me a little bit about Rare Coin Wholesalers, what you guys do, and then we'll move on from there.
Rare Coins Wholesalers is in Irvine, California, about 50 minutes south of Disneyland. Nice. We're in the financial sector. Basically, our owner, Steve Contursi, has been doing this for over 35 years, done over $1 billion of business, making his clients money, making himself money. And basically, we've dealt almost exclusively in the wholesale arena, dealing with the coin industry, coin dealers, coin shops, resellers, auctions, coin shows. But about 2 years ago, we decided to open it up to a public division so we could people can actually get into bullion, rare coins, common numismatics, whatever they want, but they can get in at industry prices. So, and also they can get all the knowledge before they do business so they know they're getting a good deal.
Right. I think the knowledge piece is really important. We've had so many listeners over the last year and a half really asking about which way to go with gold. And I'm no expert as far as which one's going to be the best from a tax perspective, or do you want physical or a derivative of gold. What is interesting, for those of you out there that are thinking about getting into gold and buying physical gold coins or bullion, there are a lot of red flags, and one of the pieces of literature I really enjoy, because I certainly think that most people ought to take advantage of me, was this red flags page that you guys wrote up. Tell me a little bit about what are some of the obvious things for our listeners out there who would like to go get coins or bullion. What are some of the huge red flags they should be aware of before they get involved? Well,
first thing, there are nine really common ones. They happen all the time. If you get called on the phone or you're going to be dealing with someone, you're going to hear these red flags all the time. So be aware of them and do more investigation. Remember, it's trust, but verify. Verify everything you do in this industry before you do it, or you're setting yourself up to get gouged. The first thing we tell people is kind of be aware a little of modern day bullion coins. Bullion coins, you should only be paying like 4 to 6% above spot to get in. You should be able to sell for spot to get out.
Are you talking about like the late night infomercials, like the new Liberty coin?
Right. They'll take a coin, a brand new coin out of the mint. They'll send it into one of the grading companies, get it graded. Ooh, it's MS-70. Well, it's brand new. Of course it's an MS-70 grade. Okay, and then they'll charge you. It's a silver 1 ounce coin. It's worth $40, and then all of a sudden they're going to be charging you, like if it's an MS-69, like $129, or if it's like an MS-70, they'll charge you like $179, and there's no secondary market on it. That coin is worth like $40, $45.
Sure. Okay.
The next one is beware of graded modern day coins. This is that exact example. Is they like to take these coins, get them graded by the big grading companies, and they think that offers extra value. It doesn't. It's a modern day coin. It's just worth what every other modern day coin is.
I mean, you got to look at a minimum, it's going to be worth its weight in gold.
It's weight in gold, or so you got it. Now, beware of coins that are promoted as rare on national TV. Think about this. If there's enough of them to promote it on national TV, it is not rare. Okay?
It'd be different. They're not going to say, we have so many of these, it's a glutton of gold coins. No, it's always going to be rare, guys.
Right.
So again, check but verify.
Okay. Beware of temporary premiums. A lot of coins will come out and they'll have an immediate temporary premium because everyone's marketing it, so the prices get beefed up. But like 3-4 years later, after they stop marketing it, the prices will go down. Examples are like some modern day coins that come straight out of the mint. Another was like some of these shipwreck coins.
Right.
Okay. When they first came out, everybody's buying them. 5 years later, they're worth half what they were originally. So you have to beware of some of those temporary premiums. Beware of foreign coins. Foreign coins, people think that sovereigns or francs that are made in the 1830s because they're quote, quote, numismatic, have some great value. They're not. They're worth the precious metal that's in the coin, and that's it, the melt value. But the only advantage they have is they're fractional gold, so they're non-reportable. You can buy, sell, trade as much as you want, and there's no reporting on them, but they're only worth the precious metal of the coin. Don't pay more than like 4 to 6%. Another one is like a generic U.S. Coins versus numismatic U.S. coins. There are millions of U.S. coins that survived between 1792 and 1932. Most of them are common, about 95% of them. Only about 5% are rare. The common numismatic coins, sometimes people like to promote those as rare. They're not. They have premiums on them above the precious metal value because they have some nice non-reportable, aren't subject to confiscation, real property, 1031 exchange capabilities, but they're not rare coins, okay?
All right.
Only buy coins if you are going to buy rare coins that are graded by the two big grading houses, NGC and PCGS. They actually guarantee their coins, the authenticity and the grade of them. If they're not authentic, they're not that grade, they will actually cut you a check for what you paid for it.
Wow, very cool.
It makes it, you're getting rid of the risk.
Yeah.
Okay. Do not tolerate high pressure sales techniques. This is the biggest. If it's a good deal today, it'll be a good deal tomorrow. It'll be a good deal next week. This is probably the biggest thing you'll see when you get these guys who are selling gold and stuff.
Oh, but you got to buy today.
High pressure sale. That's the biggest red flag you'll ever run into. And the last one is beware of firms that do not provide you names and of the principals of the company. They don't give you a physical address. Go to their website and see if they actually give you the principals and pictures of their people of their company.
Yeah, it's kind of an interesting. You got to make sure that you know who you're dealing with at all times.
Verify.
We say the same thing in the equity markets as well. Man, time's flying on this one. I'm curious. I noticed on the website here also, you guys can go to rcw1.com. I'm actually there right now. You've got a blog in the middle, which is absolutely fantastic. A lot of great information you and I were talking about earlier. You also do evaluations for free. Am I correct?
We do free appraisals. Basically, you just give us a call. We get an inventory in. We can give you an unseen quote over the phone. If it's some rarities where we actually have to physically see the coins, we have to go an extra step and actually get the coins in to actually take a look at them, get them appraised, and give you a good cash value or trade value.
Cool. One last little documentation here that I saw, and unfortunately we got like a minute left. It talks about gold confiscation. John O'Donnell talked about this one in the past, and a lot of people wondering, could this happen again?
Well, the reason they do it is the exact same reason FDR did it back in 1933. When he confiscated gold, the whole world lost absolute confidence in the dollar. The dollar devalued within 2 years by 70%. Well, basically what that means is the foreign our debt, which just got raised to 17 trillion,
I love that.
If they devalued the dollar by 70%, we'd actually only owe $5 trillion. So it's a way for basically the U.S. government to file bankruptcy. The problem is, in that process, we all lose 70% of our wealth also.
Sure. Now, do you think it's going to happen?
With Obama, I have no idea. That guy does anything he wants. And it's done by presidential executive order. He can do it, and nobody can stop him.
Well, there you go, guys. Some interesting information about rare coins. If you want to know more about rare coins, how to get involved, maybe get some of yours appraised, you can actually go out to rcw1.com. That's actually Rare Coin Wholesalers. I've been talking with Paul Buzby, who's a financial analyst for the firm and a great contributor to the website. Thanks for having on the program today. It's great.
Take care.
Pleasure. All right, everybody, we'll be right back after a very short break. If you have any questions for us, Power Blast us out at powertradingradio.com. When we come back, we got all kinds of good stuff to talk about. I'm not even going to tease you with what it is because it's just going to be good. We'll be right back on powertradingradio.com.